Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about EMCOR Group INC quarterly report. EMCOR Group Inc. offers a diverse range of businesses and services across various sectors. Some of the key areas include electrical and mechanical construction, facilities management and maintenance, energy solutions, including power transmission, distribution, and generation systems, building and industrial services, including design, integration, installation, startup, operation and maintenance, infrastructure projects, including roadway and transit lighting, signaling and fiber optic lines, industrial services, including refinery turnaround planning and engineering, welding, overhaul and maintenance, renewable energy services, technical consulting and diagnostic design, manufacturing, repair, and hydroblast cleaning services. These services cater to various industries, including commercial, industrial, and government sectors. The significant increase in EMCOR Group Inc. stock price. A year of strong performance. EMCOR Group Inc.'s EME stock has seen a remarkable surge over the past year, with a 45.56% increase in stock price and an all-time high of $753.70 USD in October 2025. This substantial growth can be attributed to several key factors. Firstly, EMCOR's consistent record-breaking financial results have been a major contributor to its rising stock price. The company has reported record revenues and earnings per share (EPS) across multiple quarters, with significant year-over-year increases. For instance, in Q3 2024, EMCOR announced record quarterly revenues of $3.7 billion and diluted EPS of $5.80. In addition to its financial performance, EMCOR's strategic acquisition of Miller Electric Company in January 2025 has also played a crucial role in its stock price increase. This acquisition expanded EMCOR's electrical capabilities in high-growth areas, such as data centers, manufacturing, and healthcare. Furthermore, the company's increasing remaining performance obligations, RPOs, signify a robust project pipeline and strong future revenue visibility. The consistent reporting of record RPOs across successive quarters has contributed to the positive market sentiment surrounding EMCOR Group. Lastly, the company's commitment to returning capital to shareholders through enhanced shareholder returns, such as an additional $500 million for its share repurchase program, has also boosted investor confidence. Overall, EMCOR Group's sustained operational excellence and strategic growth have led to a significant appreciation in its stock price over the past year. The primary drivers of revenue growth or decline are largely influenced by a combination of internal and external factors. On the growth side, acquisitions, new contract awards, and expansion into specific market sectors such as network and communications, healthcare, commercial, institutional, manufacturing, and industrial have contributed to increased revenues. Additionally, short-duration projects and service work in the United States construction segments have also driven revenue growth. On the decline side, the completion of certain semiconductor manufacturing construction projects, fewer active warehousing and distribution projects for e-commerce customers, and loss of facilities maintenance contracts in the United States industrial services segment have led to a decrease in revenues. These factors highlight the importance of strategic planning, market diversification, and contract renewal strategies in maintaining revenue stability. Net income and profit margins have undergone significant changes over the past year. For the 3 months ended September 2025, net income increased to $295.4 million from $270.3 million in 2024, a growth of 9%. Over the 9-month period, net income rose to $1.14 billion from $978.9 million in 2024. Profit margins have also shown improvement. The gross profit margin for the 3 months ended September 2025 increased to 19.2% from 18.6%, while the operating income margin remained relatively stable at 9.4%. However, over the 9-month period, the operating income margin improved slightly to 9.1%. The reasons behind these changes are attributed to revenue growth in United States construction segments, improved project execution and productivity, and investments in virtual design and construction, prefabrication, and automation. These factors have contributed to increased efficiency and profitability for the company. The company is indeed generating positive operating cash flow, as evident from the financial summary provided. The net cash provided by operating activities has been consistently high over the past 2 years, with a notable figure of approximately $777.7 million for the 9 months ended September 30, 2025. This indicates that the company's operations are generating sufficient cash to cover its expenses and investments, resulting in a positive operating cash flow. The company's debt level has remained relatively stable over the past year, with no significant change mentioned in any of the provided summaries. The only slight variation is on page 42, where it is implied that debt levels may be determined by prevailing interest rates, but this does not indicate a substantial increase or decrease. Similarly, interest expenses have also shown minimal fluctuation. While there was an increase in interest expense due to the utilization of a revolving credit facility, page 40, this was offset by a slight decrease in net interest income. Overall, the company's debt level and interest expenses have remained relatively unchanged over the past year. The company's financial performance varied across different segments and regions. The United States Electrical Construction and Facilities Services segment performed exceptionally well, with revenue growth of 52% and a significant increase in operating income. The United Kingdom Building Services segment also showed strong growth, with a 28% rise in revenue and a substantial boost in operating income. In contrast, the United States Industrial Services segment struggled, experiencing a sharp decline in operating income of 90.6%. Additionally, the United States Mechanical Construction and Facilities Services segment's revenue growth was modest at 8%, while the United States Building Services segment saw its revenue remain flat despite contributing to year-over-year increases in gross profit and margin. Overall, the company's performance was mixed, with some segments and regions performing well, while others faced challenges. Management is optimistic about the company's outlook, citing strong remaining performance obligations totaling $12.61 billion. They expect revenue growth from new contract awards and existing contracts. The company prioritizes efficient conversion of operating income into cash, while also focusing on growth through business acquisitions and capital expenditures. However, management acknowledges a potential risk to financial position and operations due to changes in surety bonds availability. The company has demonstrated a commitment to returning value to its shareholders through 2 key initiatives. Firstly, it has paid dividends to common shareholders, with a declared amount of $250 per share for the 3 months ended September 30, 2025. Secondly, the company has engaged in share buybacks, purchasing back shares worth $432,165,000 in 2025. These actions indicate that the company is prioritizing shareholder value and wealth creation through both dividend payments and strategic capital allocation. Concerns about inventory buildup and supply chain disruption. The company's financial summary reveals a pressing concern regarding inventory buildup. A significant increase in raw materials and construction materials is evident from the data provided on page 22. The $14.082 million rise between December 31, 2024, and September 30, 2025, indicates a substantial accumulation of inventory levels. This trend raises questions about potential supply chain disruptions if not managed effectively. Excessive inventory can lead to storage costs, reduced cash flow, and decreased efficiency in production processes. The company must address this issue promptly to avoid any adverse consequences on its operations and financial performance. That concludes the financial summary for EMCOR Group INC. Feel free to comment below, and I will be happy to answer them when possible.